We're going to switch gears a little bit. We're going to go into jumbo loans. So I want to go over this with you because jumbo loans are a completely different animal. Um, Jumbo loans, and I'm going to go over this in detail, are very, 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 very complex. And I say that in multiple ways. It's still the same process, but within that process are a lot of different things I'm going to go over with you. First off, we have over 250 different jumbo lenders that we go to every day to shop for different loan programs, different rates. And guess what? Every single one of them has different rates. Every single one of them has different guidelines. Every single one of them has different credit score requirements. Every single one of them has different down payment requirements, different loan to value ratios, different debt to income ratios, different turn times, and different levels of strictness. But guess what? Every jumbo lend or jumbo buyer wants. They want the lender that's going to give the cheapest rate, the lowest rate, and the least amount down. I promise you that's what every single one of them that when they come to me, that's what they want. So 95% of these options get pushed aside. And guess what happens? We end up going into the loan programs and we end up isolating them to the lenders that are the most strict, that require the most documentation, the most scrutiny, because those are the lenders that have AAA paper that are able to offer the lowest rates possible. So you kind of pigeonhole our borrowers into a very short list of lenders that have the lowest rates out there. And it ends up being really hard on the borrowers because of the requirements of a jumbo loan. So I highly, highly, highly recommend that we have a fully approved borrower before you go under contract on a purchase that requires a jumbo loan. So here's 10 tips that I put together. First off, platinum approval. This is a fully approved loan through underwriting. It identifies issues early. When we get documents from a customer on a self-employed borrower that owns multiple properties, that owns multiple tax returns, multiple companies, multiple K1s, you name it, they are typically shopping and they don't want to give us all the documents because it takes a long time to gather. So we get the one set of personal tax returns and they say, yeah, I've got my business returns, but it's so much, I don't have time to get them to you. Can you just work up what I have for now? And it doesn't work. We need all of the corporate returns. We need all of the K1s. We need to see if there's losses. There's a lot of behind the scenes things we need to look at. So doing it all up front is very important. They really need to pick their horse and get on the horse before they make an offer. And when I say get on the horse, choose a lender way before they make an offer. It's imperative. It's very important in the jumbo world. So platinum approval is fully approved up front. Don't go under contract unless you fully have a fully approved loan. It's dangerous. It's setting people up for failure. And I know every jumbo buyer, every person that buys a multi-million dollar home, they're like, I have lots of money, I have lots of income, I'm fine, I'm golden. But what they put on paper is not always what the reality is behind how much money they have coming in, and it makes it very, very complicated. So I would never go into contract unless you have a fully approved loan. I honestly would try, do the best you can. And I know you're competing with some cash offers in this realm, but try to get a 45-day closing. It's very important because sometimes these borrowers are like onions. They give you a set of tax returns, and then you see on those tax returns that there's 3 or 4 partnerships. Then you get the partnerships returns, and then you see that they sold a company, or there is K1 losses, or there's loans due and payable in less than 12 months that we have to dig into, and then you pull up those, and then they took a loan against their company, and now you have to go back to that company. I mean, it's just an onion. So we need time to go through it all if we haven't reviewed it all up front. The underwriting is very picky because these loans are not sold. The lender that we're doing these with and locking these loans with will keep that loan forever. It'll tie up their capital. So they want to make sure these loans are perfect. So they will ask for a lot more. So there's a lot more quality control. There's a larger risk for that lender because they do not sell these loans. So guess what? They're going to want more. They're going to want more detail. And every borrower will say, well, why do you need that? And the reason is because this lender is the actual holder of this note and they're demanding it. It's just that's how it works. So expect a lot more documentation. And when I say a lot more, it's everything. We don't just take your word for it. We're going to do a full-on physical, like all the way down to the colonoscopy. We need to see everything. It's pretty wild, but that's just how these are. So we need to make sure we're prepping our buyers and preparing them for multiple documentation. Now, a lot of these lenders have multiple underwriters. We underwrite it, then it goes in for second review, and then there may be an investor credit review. Especially on the super jumbo, anything over 3 to 4 million on loans, they are multiple sets of eyes. And guess what? We could have a full approval and then it goes to one of these other underwriters or second review, and we could have additional conditions. It's just the way jumbo loans are. And if you're trying to get the best rate, you're going to find the lenders that have multiple eyes on these to get it perfect so that they have AAA paper. So keep that in mind. Oh, so be prepared also for 2 appraisals. Depending on your loan amount, some appraisers or some lenders require only 1 appraisal up to 2 million. Some of these investors, if you're over 1 million, will require 2 full appraisals. We go with whatever the lower of the 2 is. We don't average them. So be prepared for multiple appraisals and also appraisal reviews. We could see conditions on appraisal that you're not used to. It's just keep in mind this money's being tied up by these lenders who own the loan. They want to make sure that the collateral is there. They're going to scrutinize appraisals. There is a lot of frustration, especially when borrowers have multiple companies, and sometimes these companies have companies within companies. There's shell companies. You may own an S corp that owns 12 other companies. Which guess what? We need those companies' tax returns. I mean, there's all kinds of stuff, and borrowers do get frustrated. It's a lot easier on the borrower to do this ahead of time instead of while they're under contract. It's really, really hard to do it when you're under contract. So make them pick a horse, make them pick a lender ahead of time, dial it all in, get it done to perfection. Then we'll know exactly what we're dealing with, and then we can pick the lender that has the best rate, or we'll know that we have to go to a lender that's a little bit more lenient. And we can give proper quotes that way. So yes, the best loan programs are usually the more strict of all. Here's a little drill sergeant yelling at you, get your stuff together. If you want the best rate, you're going to need to get us a lot more documentation. Get over it. That's how it is. It's kind of a funny little video or picture, but it's kind of how it is. Like if you want the best rate out there on a jumbo loan with the least amount down, you're going to have to follow the rules. You're going to have to follow the drill sergeant's rules because that's just how it is. And also during the process, because it's scrutinized so heavily, every little thing that changes is scrutinized more than everything else. So large deposits. I mean, it's unbelievable how detailed we have to get with these. So moving money around. A lot of these very savvy borrowers move money around a lot. It's hard to gather all the documentation for that. Financing furniture. I mean, Robin Stuckey back in the day, right? $150,000 for the furniture that's financed. Like that can impact your credit score. It can impact your debt to income ratio. All that stuff is highly, highly scrutinized because the levels of the payments on these are much higher and the level of risk is higher for the lender. So get buyers engaged way ahead of time. I do this a lot with my jumbo lenders. We get the financial planner involved, the CPA, the estate attorneys to make sure we're taking title properly, make sure the trusts are set up properly, make sure they're getting reviewed by the lender so we can put them into the trusts. We need to all be engaged ahead of time. We can't do it last minute, especially with CPAs, especially when it's tax season, because they just don't have the time to do what they need to do. So getting everyone engaged together early on is extremely, extremely important. So that's the jumbo world, guys. It is a different world altogether. And it's important that we engage our borrowers and let them know exactly what they're up against because it is very, very different than a conventional loan. The more simple you are as a borrower, the easier it is. A lot of buyers that have a lot of money think, I have a lot of money, I have a lot of income, it should be easier for me. The exact opposite is true. It is harder for you to get a loan because you have more pieces of the puzzle, kind of like a Lego set. If you're doing a 5,000 piece Lego set, It's going to take you a lot longer than doing a 10-piece Lego set. 10-piece Lego sets are simple. We can get them closed quickly. But if you have a lot of moving parts, it's going to take time and it's going to take a lot more scrutiny. So that's the jumbo world.